Thursday, November 13th, market analysis, Stan Ehrlich. I start out with stock indexes, go to futures, and have a few stocks I'm following. Now, I've been talking about this market topping out mostly because of the bearish engulfings that I got at the top of the market and some of the indexes to the exact high day. And lucky me for the MES and the ES, of course, both. We had two bearish engulfing ER sell signals. ER stands for Ehrlich reversal, of course, at the very high of the market so far. Today, I'm very encouraged for obvious reasons that we're going to see significantly lower levels across the board for a while. Weeks, maybe more. I'll get into that in a minute. So, today's closing price down a chunk, big chunk, 11-ish on the spider, E-mini, etc., was almost a new low, closed completely since the lowest low, which was only a week or so ago, Friday of last week, 11/7, Friday. Tomorrow's Friday, almost a week ago. And we could, I'm not going to be surprised, see something similar to today, even tomorrow, but I don't want to push thoughts into your mind. That would not be fair. But I've seen worse, or depending upon your point of view, better. Next is the 5-minute chart. Dropped, broke lows yesterday, early this morning as well, kept on going, broke lows the day before, broke lows the day before, and is now down relatively close to the lowest low since October 10th. That low on October 10th right there for the SPY is critical, because if we close below that low, then I would expect the market to challenge the October 10th low. And I'm sorry, dates are wrong. The November 7th low. We close below that one. Then I would expect a challenge of the October 10th low, which is the lowest low for, at this point in time, 2 months. Russell's about to do it for 3 months. So I think we're on the way down. Go listen to my previous recordings. Next, we've got the 5-minute data closing a gap. Now that implies the spider has done what I've been talking about for a couple of days now, the gap below the market. Let's go back to the daily chart. There's the gap. This is a support area. The gap, I guess I didn't draw it in, against the high on November 7th. And we came down today a little bit lower than that previous high. Gap closed. And on the 5-minute chart, you can see that it just barely got below that high right there. Gap is closed. Now, true, we are coming into some support areas, but this is the critical level right there. And that would be 661 and small change. New low close, I think, or almost, for the QQQ for a month. Dropped off quite a bit, closed very weak, closed all gaps, except for the one above the market that yesterday we came close to starting to close, but couldn't do the trick. There are 4 types of gaps. There are breakaway gaps, there are midway gaps, there are exhaustion gaps, and what we don't know what the hell to call them. We call them common gaps. So the other 3, besides common, are very useful. Breakaway looks like what we've had at the top here on the QQQ. It'll never get closed. Well, maybe years from now. And then the other 3. So I think this is not going to get closed. I think we're on the way down. 5-minute chart. Close the gap. Bounce very small amount for only about an hour or something. Boom, new lows. What can I say? Here's the MNQ. New low close. for a month. A little, maybe 3 weeks plus. There's only this low again, November 7th, last Friday, less than a week ago, that is the last vestige of support, in my opinion, because when that one is broken on a closing basis like the other indexes, the low on that date, I expect to have the October 10th lows challenged and broken, and down we go. Now, frankly, this is opposite of what the seasonal tendency has been for decades. The October low, ladies and gentlemen, did happen. It tricked me. I didn't think it was the day it was on October 10th. I expected it to go lower after that low, and it ends up being the low of October. Okay, so what? It rallied for what? 2 weeks, 3 weeks? And then all of a sudden, I've got a bearish engulfing ER sell signal on the top of the market so far on MNQ. Here's a new low close since then, today. I expect that we have a significant amount lower to go in the weeks to come. I'll be getting more specific about downside objectives on a longer term basis very soon. Next, 5-minute chart coming down. Next, we've got the YM, which is the exception to the rule. The YM did make new historic highs. I saw on TV the guys that don't know what they're talking about. The stock market made new historic highs. Well, yeah, if you follow only the Dow Jones. But if you're also interested in the SPDR, SPY, S&P 500, or the NASDAQs, then the overall market really didn't make new historic highs. 2 out of 3 indexes did not. All right. YM got overbought, new historical highs, and collapsed today, way below the previous historical high a couple of weeks ago, yesterday's low, and several closing prices in the last couple of weeks. It got overbought yesterday, and that ends up being the high day. And I'm pretty sure I said something alluding to the possibility that this could happen today. I didn't really expect it to be this significant. And the 5-minute chart. Boom. All right. Russell is already down to a new low close for 3 months. It almost made new lows also, but managed to hold at the low of a week or so ago, and then the low on October 10th. And I think there's a chance the other indexes could hold for a day or two or several hours, something like that, based on October 10th lows for the individual indexes. We'll see what happens, maybe very soon. So this is ready to bounce a little bit, almost oversold, not quite, or it's going to break through, crash to the low of the support area, big time, 2304, then have a bounce, and that'll happen in the next day or two. Not quite sure which, but I'm prepared for a bounce, but still I'm bearish. Russell 5-minute chart. Bonds starting to come down. I expect, as I've been saying all along, a test of 116.11 minimum and probably 115.25-ish. And I'm not ruling out way down in the area of 113 or so even. I don't think so. I don't think it's going to go that low. Notes broke down pretty good today. New low for a couple days, actually maybe 5, 4. In a support area though. Not oversold, nowhere near. Could easily drop to the bottom of the support where the real good support is. And if it doesn't hold there, then you're breaking the bottom of the support area and a bull trend line and probably the lows made a week or so ago. And kaboom. You're breaking out of a double top formation and your downside objective would be 110.12. Next. New low, steady close, crude oil. But yesterday was the killer. New low close for a couple, 3 weeks. Down from a resistance area it failed to break out of to the upside. So kaboom. Totally expect to move down to 55.9, 56 even, and probably even lower than that. Next, We have a new high up to resistance on natural gas and a nice rally, but the close was iffy around the previous highs the last couple of days. Overbought conditions for third day. And again, almost touching resistance level that's been there for a long time on my charts. I think this is ready to roll over. Let's see it happen. Next, we were overbought the last couple of days, and yesterday was a killer, dropping off in heating oil a big chunk. Today there was a modest downside follow through, new low, lower close. I think we're on our way down to probably the ballpark of 2.2 and even maybe 2.09. Next, overbought conditions in gold. Now, first day, rally in a bear market. I think it's possible. Looking for a turn down. Started to close below yesterday and the day before, almost the same price. Lows would probably cause me to be much more optimistic about it dropping off all the way down to these lows in late October. And then we're going to see my expectation longer term, if those two things happen, down to 35.97, a little below 36 even. We're overbought on silver, second day. Punched through the previous highs. Couldn't hold. I've said this 100 times. Last 3 years I've been doing these videos day by day. When you make a new high for a trend, bull trend, and you close below the previous highs, it's not a good thing. On top of that, it's not only that, it's also below the close of the previous day as well, which had a high at resistance. So even though we punched through it today, sorry, this is frankly pretty bearish. I know it's not a red ER sell signal. It's got all the conditions except for a lower low than yesterday's lows. Next, platinum. Bearish engulfing, true, but it wasn't overbought, so it didn't turn red. Bummer. Got, so-so. And I think it's turning down. Test of lows, maybe down to something significant like 134. Next, high grade. Almost a bearish engulfing. Closed poorly. New low close for the previous 3 days. But it's got a little support here. So I might expect it to hang around for a bit, but I think this is turning down. You know what I'm going to do right now? I'm going to draw on the neckline. I did not realize that until just now. We have a possible head and shoulder top on high grade copper. The last shoulder high is today. Wow. Okay, hang on a second. The high for the shoulder, first shoulder is right on that day right there. There's the number of days from shoulder to head, and that would be the exact timing. 1, 2, 3, 4 days from now, if the high is still in this same ballpark as today's high, or maybe a little bit better, the symmetry would be better timing wise. But this is okay. This is not too bad. If we go straight down from here, I just drew the neckline. Timing is a little bit too soon. I'll leave that line in for a day or 3. Next, possible top. Soybeans. You know I've been bullish on grains. Wow, look at this. Great day. Soybeans, new high close. Extremely bullish. I love it. I've been talking about a major bottom long term for months and months. This is the highest high now since July of 24. But we are approaching a bit of a level, I should draw that in, of resistance off of this low right here. It's on the same level, another green bullish engulfing. Let's drop it right there. So here we got a buy signal at support. Good. That one bounced for only a week. Crash. Ever since it's been below that level. We're coming back to it again. That is a level of 1156. So we're super close. We're also very close to overbought, not quite. Around 1156, I think we're going to see another minor high for a few days. Could be a week, could be a hair more, but probably not. Then new highs again. Love this chart. Long-term bullish. What can I say? Soybean oil. Dipping back down slightly. Remember, we broke the major bear trend line across the top of a downward slanting channel. 4 days ago, decisively, had follow through the next day, and a little dip yesterday, a little bit today. As long as it stays above this trend line, the top of the previous channel, secondary top, if you will, I would be very satisfied and still expect very soon new highs for the whole trend any old time now. There she goes, soybean meal, new highs for the trend for a long time. I'm looking at approximately February this year, February 7th, the highest high on a close as well. Looking great. Not overbought, close. Bull markets get more overbought more frequently. Common sense. They're trending up. A new shove to the upside would pop up into overbought conditions as long as there's a pullback that doesn't go too far, last too long, and another shot up again, you're going to get another overbought condition probably. And bear markets do the same thing on the downside, except bear markets collapse much faster, probably about 3 times faster than bull markets go up. So oversold conditions can last longer. Next, new high close on corn. Great. You know, my minimum upside objective is a ballpark of 471-ish. We're on our way. All I got is 30 more cents. Yeah. Okay. New high close since, oh, wow, did it close that old gap? It sure did. Ancient gap way back on July 3rd to July 7th on the downside has now been closed. Finally, I should have brought this marker all the way over here. Sorry about that. And there, oops, there it is. I goofed. So finally, on its way up, what can I say? And I'm going to bring this resistance level off of those old lows right there. I see those old lows right there. Okay, cool. Up to resistance, not quite. Next, wheat. Got overbought, hit resistance profoundly. Again, I should have been bringing these things over a while ago. Sorry about that. Hit resistance, the second layer, this one right in here. Okay, and stopped, overbought, pulled back. That was a few days ago. So far, sideways. No downside progress, no upside progress. We're just staying at the almost exactly same closing price for what, the 5th day? Wow, that's kind of strange. So I'm looking for a rally and a new high ground. Grain, bullish. Next, Apple. No major reversal, no major decline. Still a possible double top. Not that big a deal. Even if it was a double top, what have I got for downside objective? Probably 557. But there's a gap to close at 563. 53. Another support area that I think is actually going to end up being challenged, and that's the beginning of it, 240. That's what I'm looking for. Next, big breakout to the downside on Tesla. New low close for a couple of months. But it did close a gap I was talking about forever. And that's done, past tense. Don't disregard gaps. They are one of the best tools I've been using for 5 decades. So, done. There is a small one down here. The size theoretically doesn't matter. And there's another gap down here, 338 3/4. But that's underneath a layer of support that's pretty good. I'm looking mostly for, below 370 slightly. Next, NVIDIA. Dropped off sharply. There is a gap to close above the market. It may be a while before it closes that. That looks like a breakaway gap to the downside after an exhaustion gap to the upside 3 days earlier. Looking for the slows to be tested 4 days ago. Probably a minimum down to 173 and lower. Now, remember, if my expectations of the stock market indexes are going to come true, a lot of these stocks are going to go down a bit lower than I'm talking about. Lastly, AMD dropped off a bit, closed a gap. End of story for that gap. Pull that back over here, done within 2 days. That gap was also done 2 days after it happened. But the problem is there is a possible double top here. Now, I don't have much help with the RSI. It didn't go too high. It's just my expectation about the overall market. So I think we're in for a test at a minimum of probably 224.77-ish. And this gap cannot be ignored all the way down to 170. You have a great day and profitable trading to you.